But if you break this line, this is a definitive trend line connecting all these lows. That's where I think you start to flush. You'll probably get a small bounce at the previous 2017 high and then eventually break through that. So I think, again, yeah, short-term neutral to positive on Bitcoin from here. And then again, later this year, you got to expect one more flush out. And it probably will be the... Yeah, so I mean, per the last Federal Reserve meeting a few weeks ago, we basically had a little bit more of a dovish Federal Reserve tone, right? So they raised the 75 basis points, which is what the market expected. But in the conference, it was a little bit more dovish. That created this massive move up in the tech sector. We saw stocks and the S&P just rip higher, right? Now, interestingly enough, we got the jobs report this morning, right? So the non-farm payrolls came out. It came out over 500,000 new jobs. And that kind of made the markets freak out a little bit because I think the markets had thought the Federal Reserve was almost done raising, if not done, and expected a weaker jobs report to kind of confirm that they were on the sidelines. With this better than expected jobs report, I think it puts September in play for at least 25 basis points, maybe 50 basis points. And that has the market again a little bit uneasy that the Fed is just going to keep tightening monetary supply. Now, for me personally, I think that the jobs numbers are lagging. So I think that, again, you're going to see more and more weakness coming in the coming months. So maybe the Fed raises in September a little bit, but I really do believe that's it. I think that'll be all that there will be, because I do think we'll be in a defined recession. I mean, even now with the GDP numbers, you could say, yeah, we're in a recession, but the jobs numbers kind of go against that. But I do think by end of year, there's no doubt about whether or not it's a recession. Yeah, so I think definitely they're halting after September, if for no other reason than the midterm elections, right? So the Fed never wants to be viewed as influencing the elections, and it's not that rate hikes would do that. It's more that if the rate hike causes a massive market sell-off or a market rally, then that could be looked at as influencing. So I think September, again, 25, 50 basis points, but then I think they stop for the elections, and then I think by the time the elections are over in November, December, the economy's far too weak to raise anymore. Now, let's be clear. I don't think the Fed's going to come out and start lowering rates and printing money again in the near future because inflation is still going to remain elevated. Now, I do think a year from now, we could be in such a bad recession with let's say, inflation at 4%. And if we have unemployment, let's say at 8% or 10%, then yes, that's the lesser of the two evils. And that would be to print money again and try to get us out of that. So it's a tricky road here. The market is not understanding that the Fed has its hands tied yet. And I think that's going to be the next shoe to drop later this year, like November, December, when the markets are like, oh, look, we're in a recession. Fed, please come save us. And the Fed's going to say, guys, inflation's at 4 or 5% still. We can't print money and save the day. And then you see the next big market flush. Basically, what you've had is ever since we pierced that initial pierce of the 2017 highs here, we've seen Bitcoin kind of go up a little bit, come down, up, down, and basically going sideways to slightly higher. So I'm inclined to think that in the near term, we continue to see that price action. I kind of expect one more move up here, maybe in the Bitcoin chart, hitting 25,500. There's a small chance we could get up to resistance at 28 and change. But ultimately, I think that later this year, when that shoe drops, that the Fed can't save the day, and it causes a big risk reduction, right? And I do think there's still one more leg lower before we finally get a bottom. And I'm still pricing in really a target price of around $13,000 to $12,000 on that next flush. That's exactly what I think right now. And again, the easy way for us to tell is to look at this channel, right? So see this upsloping the bottom line, that's kind of keeping price in check. As long as price stays in here, I think you favor neutral to upside, maybe here or here. But if you break this line, this is a definitive trend line connecting all these lows. That's where I think you start to flush. You'll probably get a small bounce at the previous 2017 high and then eventually break through that. So I think, again, yeah, short-term neutral to positive on Bitcoin from here. And then again, later this year, you got to expect one more flush out. And it probably will be the nastiest and the worst in terms of fear. because always the end of cycles are the scariest, right? Where things, imagine seeing Bitcoin at 12 or 10,000, everyone's going to start to doubt, like, will Bitcoin survive? Can it survive? That's when you actually, as an investor, need to start thinking about really buying into it. Yeah, so I think the narrative right now is, and what's interesting for me is that you can see the kind of the angle on Bitcoin's been very sideways to slightly up. It's not been vertical bouncing. And I think part of that, and what's interesting is if you look at the NASDAQ's really ripped up, and those usually coincide. So a lot of people have been saying, well, why hasn't Bitcoin had a big move up like the NASDAQ instead of just going slightly up sideways? And I think the answer there is that, with Celsius and Voyager and all these other ones, you have a lot of money that's just scared. Like, who wants to put their money in with these brokers and be in crypto when who knows what the next shoe to drop is, which broker is going to go under, which one's going to file for bankruptcy. So I think that's kind of keeping a lid on the upside price in Bitcoin as well. But I think later this year, that narrative is going to shift to that panic sell-off. And I do think the final flush out will be something major. I don't know if it's Michael Saylor and MicroStrategy's finally throwing in the towel and dumping their Bitcoin at like 10,000. Maybe we see a bigger broker go bankrupt. I mean, all these possibilities are there, but I do think more is going to happen before you get an ultimate bottom. So what's interesting about the 2017 cycle is you kind of had this period where we had the big dump out, and then you had this lots of chop for a while, which could be what we're doing right now. I'm not sure, but that would make sense if it were to go till like October, November. And then you had this final flush out. And then notice how it took a while for it to kind of digest before finally starting to make that next move up. So again, if you look at this final flush, it kind of bottomed out in December of 2018. And then the next move up, you could arguably say, kind of started in April. So my guess is you have about 6 months of chop around the lows where you have people that are saying, this is the worst. And then you have people that are nibbling, maybe smart money starting to buy down there. And you get that kind of exchange where neither side is winning. They're just exchanging shares from people that are fearful with people that are buyers and saying, okay, this is the right time to accumulate. So my guess is, yeah, you'll see usually bottoms, you'll see a lot of chop as the bottom is made. To be clear, like, if there's one thing I know, it's that it's very hard, and it's very hard for me to pick exact bottoms, right? So like when we were down at 19,000, I basically announced that I was going to be buying my first HODL position out of a multiple, right? And the idea there is that, I basically in my head, I love Bitcoin long-term. I'm such a big bull long-term, even though it doesn't seem like that. I'm just a chart guy. So if it tells me it's going down, I have to go with that. I can't, make believe. So basically in my head, I'm like, okay, I'm going to put X amount of money in Bitcoin as a HODL position at some point. And at 19,000, I put like 1/6 of that to work. And the idea there is that basically, I do believe it's going to go lower. If it dropped another 2,000 to 3,000, I do another 1/6, the other 2,000 to 3,000, another 1/6. Basically, dollar cost averaging all the way down to like 10,000. And then the way I look at it is like, even if it goes to 10,000, if my average price is 15,000, and it's going to 100 or 150 or 250, like at that point, it's a rounding error, just kind of generally say, okay, well, this is a good level if I have that long-term thesis. And then you just start to kind of dollar cost average in. I call it, it's funny, yeah, because I do the same thing. I call it the shotgun effect, where like if you're like a sharpshooter, you have to hit the exact target. But if you have a shotgun, like it sprays everywhere in that area. And it's like, listen, just as long as you get it in this area, you're good to go. Yeah, so I think like, for me, number one is I think that Ethereum is going to survive. I think it's got enough built on it where it's going to survive. The question is, how low does it go? We have hit resistance here on Ethereum. You can see these pivot lows right here. And then look at exactly where price went. It pulled back. Now it's trying to break through there. If it does break through there, maybe we get up to this 2,000 level. Maybe off chance we get to this downsloping line, which connects all the recent highs. But the bottom line is, to me, this is just an interim rally before another leg lower. And the key is, where are we going to go? And my guess is you're looking at like $650 or so, I think. But this is, again, one that I think will survive. So it's one that I'm very interested in kind of hodling at the right levels. I don't have any yet. I was actually going to buy my first one at like 830 right here. There was this little pivot point right here, and it just never got there. It never got there, so I didn't get filled. But the bottom line is, as a trader, you learn very quickly that you'll miss a bunch of trades, and that's okay because there's always more trades coming around the corner. Like a lot of the kind of the retail crowd is always like, oh my goodness, I missed a trade, I got to chase it now. I'm just like, you know what, missed a trade. It's just another one of the thousands that I've missed in my trading career. But you know what, I only have to catch this handful, and I'll make great money. And anytime I let that discipline slide and I chase, I almost inevitably can guarantee that's my losing trade. And it's just like, damn it, why did I chase it? Why did I break my rules? And Polkadot's trying to have a little bit of a bullish run here. It has to break this area, $8.80. But if it breaks 880, I think you have a shot of going to maybe $10.80. So, I mean, I think there is some near-term upside in some of these before that leg down. It's just a matter of your time frame. Like, not everyone can be a swing trader. If you're not a swing trader, just sit on the sidelines or dollar cost average in. Yeah, for crypto, at least, I don't trade anyone else's capital. It's just, I do it for myself, and I just put out the signals. So verifiedinvestingcrypto.com, it's just purely, basically when I see a level, when I see a signal that's a high probability trade signal, I'll put out the long or short at the exact price. I always I do my recommended portfolio percentage too, because I think that's really helpful to people. Like people always are like, wait, are you doing everything? Are you doing like 1%? And so I do that as well to guide them. And then each day I do a video, which kind of we walk through all the technicals of the chart. So it's great to see people that, I have people in the service now that they bought in at like 65,000 because they got caught up in momentum. And now they're like, thank goodness I'm finding out that there's a different way to do it where it actually makes sense and I can make money on these type of moves. I have a bunch of different brokers. So this is the kicker, right? Even before we started seeing some of these brokers having issues and not allowing withdrawals, I was always one where I come from a stock world where your investment account is FDIC insured. And I'm very aware that crypto accounts aren't like that. They're not insured by the government. And so I spread my money around through multiple brokers. And that way, if one has an issue, at least it's not all my money. And I think that just mitigates. So it's interesting because as a trader, you always are looking for high percentage, low risk trades. And I think as a trader, once you get good at that, you kind of start to replicate that in your daily life, right? Where, okay, well, how do I mitigate risk with a broker? Well, spread your money with 3 or 4 brokers, doing things like that in life. And it works really, really well.